Well, this is a big one. In fact, the time of recording right now, I don't even know who won the election, but it's election day today, and I thought, why not trade election day live, do a live stream, public signals, and document the whole day, and that's exactly what I'm going to do for you. And the reason I wanted to trade election day, well, part of it was I want to make a banger of a video and get people's attention on the virality of the moment, I'll be honest. But I also want to show the reality of trading, and on this channel, I've been all about transparency. That's why you've seen 1 year of public signals where I've given trades live ahead of time, and in that 1 year, I've given over 70 signals that are ahead of time, giving the entry, stop loss, trade management, TP levels, full explanation, and through the public signals and me documenting that, you've seen the reality of trading, how you build an equity curve and how you double down and how you deploy certain setup types. And the reality of trading is sometimes you have the highs. For example, earlier in the year where we did 18% in a single day because multiple trades hit the 1 to 10 TP level, and that was fully documented and fully verified. You saw the MyFX book, you saw the BrokerSync journal, you saw proof of the live call out ahead of time, you saw my MT4 screenshots, you saw everything to show that that was the highs. But the reality of trading is we're not here to sell a dream, and we've also had the lows. And in fact, in the public signals, I've had 7 or 8 losses in a row. In the vlogs, you've seen me taking break-even trade after break-even trade, or even losing trades in the vlogs. I don't want to paint this perfect picture that all I do is take winning trades and everything is easy. And in the last year, with all of the videos and the case studies and the vlogs and the public signals and the live streams and everything in between, you've seen me doing realistic, real-life trading performance. So when it comes to live trading election day, although there's a lot of hype and a lot of buzz, it doesn't mean it's easy money on the table. And there's a fine line between just gambling away and ending up having a home run day or a demise day where you blow your account versus what a real trader should be doing, which is controlling risk and controlling how they take the opportunities. So my approach was taking more opportunities than I ordinarily would, breaking even fast to protect myself with hopes that one of my trades goes all the way to take profit too, and I can capture a high percentage day. And let's see how that actually played out. And you'll see by the end of the video the exact trades that I took on the public signals, on the live stream with my members, and actually how my performance ended at the end of election day. This is where we were on a higher time frame. 4 hour for me is kind of higher time frame. Why? Because if I'm on the daily time frame or even the 4 hour time frame, what do we really understand? We have a supply zone over here that made this whole bearish leg. Since then, it's been bearish. So until I arrive to these supply areas, it doesn't really matter for me to mark it out because price is here on the election day. And then also we have this previous demand area that made this bullish push. Price came into that demand area, swept it, did an inducement over here. So once we've had that major inducement of this previous demand area, price started to climb bullish, internal higher highs, internal higher lows, and so forth. This bullish trend. For me, these higher time frame demand areas, price is not near it. Supply areas, price is not near it. We are right here in no man's land on this time frame. So let's jump down to an M15 right away. So this is how price looked on the M15 on election day as we approached New York Open. And the key things is this previous area where I actually sold yesterday, and I actually did it on a live stream with my members as I do most of my trades. Think of the power of that if you're on a funded account. 7% up last month. Imagine that on a 100k account, 7k. I'm just saying the power of live trading with me. But anyway, we have to analyze this area because price has now come back to break even the next day as we arrive to the New York session. So we could either say price is bearish and we go to fill in this gap over here and come over to this lower demand area because this is a bullish impulse higher. That's one thought. The other thought is let's analyze where this is bouncing off. We are in a higher time frame supply area. This is the point of interest where price arriving in October. And the key thing to understand is, although I've done case studies in this area, just to remind you, inducements lead the show. And we had a significant break of structure happening in this area. First thing to note is we had this trendline liquidity, inducement, break of structure. And I want you to follow the inducements to understand control. So we had this trendline liquidity, Asia high swept, inducement over here, leading to what? A break of structure. So once we found a meaningful inducement, what happens next? Price comes back, sweeps Asia high, does an inducement into that previous inducement zone. How do we know that's an inducement? Because it led to a break of structure making this low. So we follow that story. Once price has done that inducement, price comes back, build up over here, inducement and mitigation into the previous area. So we found a third inducement. How do we know this is an inducement? Well, it led to a bearish break of structure. So we follow the narrative. Build up, sweep and inducement, break of structure. Build up, sweep, previous mitigation, inducement, and new lower low. Build up, sweep, inducement, new lower low. So this is the same thing repeating again and again. And as I tell you, the inducements run the show. Inducements is how the market moves. What happens next? Asia high sweep, local build up sweep, mitigation of previous POI, inducement. Why? Because it makes a lower low. Same thing again. We get a inducement over here, new lower low. What do we get over here? Build up of Asia range sweep, local build up and inducement over here, inducement leading to a lower low. And the story story goes on, even here. As price is getting further and further down, the same principles are applying. Asia high, sweep, inducement over here, mitigation right here, new lower low. That's how we confirm it's an inducement. So when we get to current price action of this week, we can start to see prices bouncing off these inducement areas. In fact, if I mark this out just for you to see, we follow this POI across. What happened? Price came to that point of interest, induced Asia high, swept. The major inducement of that POI gave a bearish reaction and then eventually failed because that's not the key point of interest. So we know that all these zones that we have marked out, all of these inducement zones are important. So the trade that I took yesterday on the live stream with my members was in this area. So let's analyze this a little bit further. So this is the point of interest that price is bouncing off. We have a previous inducement zone. Why is it a confirmed inducement? Is because that inducement led to a bearish break of structure. Now when price is arriving to this area, what is happening? The same thing as always. Asia range is liquidity. Price induced Asia low first, gave the internal break of structure, mitigated the inducement. London open on the minute, volatility kicked in. So we know time-based manipulation as always. Then we get to the early seller's trap that happens over here, time as always. And we know that this was an early seller's trap. Why? Because although it swept Asia high, it did not come to the inducement, number one. Number two, we know that anything between London key window and New York key window is likely getting trapped. So we invited sellers in, we threw them a trend line, we gave them the bearish break of structures. New York key window, as you see in my custom indicator that I built for myself, we not only induced London high, we not only induced local highs, we also induced within the POI. So we had a sweep of Asia high, London high, local high, and POI high, and we swept all of that within the key time window and came into the M5 refined IFC of the previous inducement zone. So we know that this is a crucial area because there was an inducement over here, and that inducement, when we play it through within the POI, led to a lower low. So we know that if it's an inducement leading to a low, it's an important point of interest. As you can see right here, price continued to go bearish, not only breaking structure over here, actually breaking the lows of the day. So we can verify this is actually a good point of interest to be interested in. So now we've confirmed the zone by having an inducement of multiple levels, mitigating a previous POI, inducing, and then leading to a break of structure, verifies the POI. What do we do next? We zoom into the POI, the area we're interested in, and we refine it until, in this case, the M5 imbalance. It's usually M5 or M1, and it's usually determined by a pip count. And in this case, the pip count, I like to have it no less than 5 pips. So therefore, here we have perfectly 5 pips as a POI. So that's now the POI confirmed. We go back to current price action. So now that we are back on current price action, you can actually see this area that was actually a demand to supply because it led to a higher time frame break of structure. This is where price arrived to yesterday. This area is where I entered yesterday. And even though you've probably seen the B-roll of the screen recording of the live session, you get an idea of build up, inducement, mitigation, liquidity cycle leading to a low, bouncing off the higher time frame zone, which was an inducement itself. So perfect stuff on yesterday's stream. Now today, what am I thinking as I'm arriving in election day to the New York Open right here? My thoughts are within this area because this area is important, and I'm refining it down to M5 for now. And the reason this area is important is because not only has this area led to a bearish push, we have this gap to fill, and price could come all the way back down to this demand area. So sells could be interesting from higher time frame POI, bearish rejection, and demand area waiting below. So this is my initial thoughts, but I also have to be aware this could all be liquidity for me on this day. As we know, order flow after break of structure can be liquidity, and we come back to this refined inducement zone. So I'm keeping my eyes on this refined inducement area. We've refined it down to an M5 imbalance just like we did in the POI, and I'm waiting for inducement in the key window of New York. This is election day. I know it could be a lot of volatility, a lot of movement, and a lot of wicks and traps. So I have to be careful, especially as I approach New York Open. So the first things I'm seeing right now is we have, first of all, a internal bullish trend where we have higher low to higher high, higher low to higher high, and we are looking potentially to find that new higher low to go into our supply zone and continue that bullish trend. So that's what I'm thinking for now. But as we know, market structure is not as important as inducements. Inducements will tell us who's in control. So when I start to look at that, I see very clear build up over here, very clear inducement, structurally relevant. This inducement led to a new higher high. So perfect. I know that the buyers are in control based on that inducement. Same thing over here. We have a build up of liquidity over here. We have an inducement right over here. That inducement had some mitigations over here. And then this is an area that led to the new high. Now this area over here, I'm going to see as liquidity because it hasn't arrived to a POI. It's just doing the retracement. So we know it's a higher high. It's not a supply zone. So that will get attacked. And I'm monitoring now to wait for an inducement to get in on. And whereas my interest, well, all of this could be liquidity. So I need to wait for an inducement for me to confirm where I could be interested in. So for now, I know that the sellers are in control. Why? Because I've seen that inducement based on this little build up over here. So I know the sellers are temporarily in control, and that build up inducement had mitigation right here, bearish reaction. So no point in me buying. And this is where I get interested. I'm like, perfect. This is a potential inducement. As I approach my key window right here, it's inducing this liquidity on the left. It's taking out this previous zone where no doubt people would have been interested. I'm going to call it a smart money trap because we had equal lows, run of liquidity, push out, all of that order flow liquidity and the smart money zone getting swept, and then price reacting with intention. So I cannot jump into a buy because price is now arriving to this previous inducement zone. And for now, I can see that as potentially a supply. It could also be a smart money trap, but as we see, it's the efficiency of the pullback we cannot enter. So when I see price now breaks this zone, I think perfect. This is now giving me a trap. We've had that manipulation, and now we know this inducement has now failed. The sellers are no longer in control and the buyers are actually in control. So I give that a bullish break of structure, and now I get interest in this area. So now that I've identified an inducement zone, a clear inducement zone with a 3 pip stop loss, that's perfect to go. But again, I want to do a refinement because even though I'm arriving to the key window, I'm not sure that I want to be buying in the middle of a trend where we have a supply zone above and a demand zone all the way down here. We're in the middle of a trend, which I'm not usually a fan of. So I'm doing this because it's election day. I don't like to trade in the middle of a trend. I like to trade at the beginning, but I see a clear inducement, time window, and intention with a trap. So these things are getting me excited, but I want to get extra confirmation in this zone. Even though I could put a limit here and give 3 pip stop loss, I want to have a bit more precision and also clarity, confirmation. So I'm going to wait for price to arrive into this area before I give my public signal and actually take the trade myself. So when price arrived in here, it's arriving nicely, but I don't have full confirmation. And as I see price is hanging around this area, my key window kicks in, and this is what I see. I see perfect. And on the minute of the key window, what am I seeing? Bullish break of structure. Internal bullish break of structure right here. And so I know now that this could be a potential minor sweep right here. We've had this bullish break of structure, I'll label it. And now I have a zone I can trade off with a little bit more clarity, which is right here. So that's the exact imbalance that I'm expecting to get closed. But for the sake of getting in the trade, because I don't want to have a ridiculously small stop loss, I take the whole block. So I enter here, stop loss down here, 3 pip stop loss, break even on a new shift, and 1 to 3 target, 1 to 10 target. So now this is the trade all set. We've had not only an inducement that's happening with a smart money trap around New York Open, perfect checkbox, that's exactly what I look for. Then we've had a bullish break of structure, intention. We've left an imbalance, which I like. Then we've had an internal break of structure on my key time window. I found the perfect zone within my tolerable range of 3 to 7 pip stop loss, 1 to 3 partial over here, full volume all the way up here at 1 to 10. This trade is an election day lock and loaded, and I liked it so much that I gave it as a public signal. But not only that, within the community, we do live streams every single day. And within the live streams, this is what we spoke about. Dozens of members took exactly this trade. You can see exactly where they entered with all these screenshots you can see on the screen of every single one of their entries taking the trade alongside us. This is the power. Not only can I give public signals and be confident in my own trading and make tens of thousands of dollars in a single trade, hundreds of thousands of dollars in a single month, and millions of dollars in my life. I can call it publicly live, but so can the members and the whole team winning together. What a feeling. So here's my public signal. I can say I'm buying EURUSD, signal number 68. Total gain so far is 57.5%. And the reason I'm buying, you can see the screenshot of the MT4, the reasons I'm entering, exactly where I have it right now on the screen for you guys. In the breakdown, I'm giving the signal and I'm entering on this trade. And then we have the full follow through. I'm giving a bit more clarity and explanation. And then we can see the members as well winning together, which is pretty crazy for me to see because not only did I take it, the public took it, the members took it. It was epic. And then we have later on TP1 hits. You can see my entry and then the TP1 and price is flying in profit. And we can see 1.5% locked in at 1 to 3 risk reward, taking total gain after 11 months of signal to 59%. And here's the update of the tweets where we can see everything there. 59% for the year. Previous tweets tagged. You can check the timestamps. Everything's legit as always. So now that you've seen proof of the public call out, the public signals 59% up after 11 months of live signals, giving 69 signals. It's been a crazy ride. It's been a crazy journey. No one in the industry has done anything like it. I'm proud of myself for being able to do it and pulling off something so major, but also the community that we've built along the way, the millions and millions and millions of views that these public signals have had, over 20 million views in the last year on the public signals, and the amount of people that have passed an account, taken payouts, made real money from the public signals. It's been an incredible journey, and obviously the members live streaming, profiting alongside me. Epic stuff. But let's continue on with the breakdown. So we saw price gave the internal break of structure. We entered right here. As I said, price wicked into that preferred zone, but I'm not going to trade with a 1 pip stop loss, but you can see price is following the laws, closing off that M1 imbalance. And then very quickly, price reacts, and that's exactly what we expect. Quick reactions from zones. So the importance of knowing when the market's going to reverse and where leads you to have minimal drawdown, sharp trades where you can break even very quickly. You don't have to have emotions of stress or hanging around in drawdown because you know when and where the market's going to reverse. And then you don't need a 30 pip stop loss. You can time it to a specific zone. And I want to bring to your attention also GU, correlated pair. This is something I always look at, where we can see the same thing was happening. We had a buildup of liquidity over here on the left. We had the inducement, but the inducement also had a divergence, where from here, the inducement to the mitigation price is going up. But from here, we can see from the inducement time to actually the mitigation, it was going down. So when we have that divergence, it's an extra confirmation for me. And then we had a build up, minor inducement right here. So this is confirming to me the EU trade that the buyers are in control. Now, as price went higher on GU, price arrives to that previous day's supply zone where we had an inducement right here. And this inducement led to a low. We have this local liquidity and an imbalance right here. Price arrives back to this area on election day. And the reason I'm interested is because we get an inducement, mitigation, and closing off the imbalance. Perfect stuff. We're in the buy on EU and we are looking for a potential hedge, because what I want to do is trade aggressively, break even aggressively, because I don't know where the market's going to go. It's election day. So it could go bullish or it could go bearish. So I'd rather be in an EU buy and a GU sell where they both make sense, in profit, break even on both trades, and let the volatility take one to take profit two. That's the perfect way to lock the market, be in a buy and a sell on correlated pairs and allowing the market to do its thing. So that was kind of my plan. And when I saw that inducement happening into the supply zone, closing off the imbalance, and then my preferred entry type, a two-leg protocol, I was actually live streaming this. You can see the screen recording where I'm entering exactly here when I see we have a two-leg protocol where we have inducement high, internal push down, internal lower high, new lower low. I enter on the imbalance closure, live stream it. You can see the recording. And then I mentioned the whole trade breaking down. And we can see volatility kicked in around here at 10 a.m. New York time or UK time 3 p.m. So I looked over here and unfortunately that wick took me out of this trade just by a wick. Now this is the frustrating part because price went all the way up in the end to my TP2. It would have hit that 1 to 10 risk to reward and would have locked in 6.5% gain for me as time went on and even further. But obviously I lock in my partials, a full trade as I expected. News wicked me out. That's election day trading for you, I guess. But that allowed me to get profit over here. So I locked in 1.5% at the 1 to 3 risk reward here, locked in 1.5%. Live stream this trade locked in another 1.5%. So between the public signal and the live stream, I combined got a 3% gain on the day so far. So things were looking great. Election day was going great, 3% up, 2 wins, publicly documented it and everything that I would want it on the election day for the viral video. But then, as you know, the market is not so forgiving always, and this is the reality of trading. So as price went on, I was interested in hopefully getting this to a 1 to 10, but unfortunately price started to climb back to break even. So that's fine. When price came back to break even, I'm still interested because we are following inducements. And I know, for example, we have an inducement into a supply zone, closing off an imbalance with a bearish push down. Price is now sweeping this liquidity, closing off that M1 imbalance and giving this area. So I thought maybe I can still monitor for sells. When I saw this bearish reaction, efficiency of the pullback coming into a local demand, a decisional, I cannot sell because it's coming to a demand area. But when I see prices doing a minor inducement right here with the divergence on EU, which you've studied now with me and you know exactly what it is, that divergence is confirming to me it's a protected high. Whereas that divergence where here is making a high to a higher high and at the same minute it's making a high to a lower high. So that divergence between EU and GU is a confirmation that this could be a protected high. Could be. This works a lot of the time, but it doesn't work all the time. But when I'm pairing these things with a sweep of liquidity we could have in this area, mitigating a previous inducement demand, getting the divergence, I'm interested in this zone. So what do? I wait for confirmation. And when I see this bearish break of structure, this previous higher low that made the higher high, inducement and giving a bearish break of structure, this is the zone I was interested in. That's the last imbalance, and that's exactly where I should have entered. I wasn't fully on point, I guess, and this is the power of hindsight, but this is exactly where I should have been entering. Somewhere around this area, I probably thought it's an 8 pip stop loss, rather large. Let's wait for further confirmation. So what did? I waited for this. This is the bread and butter thing I do, where I've tapping into a zone, internal, new lower low, 2-leg protocol, and then I entered over here and gave it as a public signal. Right here, public signal called out. You can check it on my Twitter. I documented this, and that's the exact trade I wanted to take. Market had other plans, swept me out. So I'm like, great, that's a loss now. So I'm from 3% up. Now I'm 2% up because I've just taken a loss here. Then I thought, okay, price is now coming back to this inducement area and I can consider somewhere along the lines of here when I see this bearish break of structure. perfect. I'm like, great. Price has induced the previous supply area, given a bearish break of structure, and I'm entering in this area. And this was the last public signal I gave. I thought, should I enter over here with a 4 pip stop loss or over here with a larger stop loss? But regardless, I was entering in this area, another public signal, which started off a little bit in profit, and then eventually price went on to fail me. So with that all being said, as you can see, I was doing really well on election day. I took a public signal in front of everyone, 1.5% gain, and the members of my community also taking that same trade, everybody winning together. Then I took a sell on the live recording that you just saw, which ended up being a break even after hitting that 1 to 3 risk reward take profit area. So we locked in 3% to start off the New York session, and by the end of New York session we took a couple of losses. So in the end, not a magnificent day, but still a good day. We didn't end up in the red. We still were controlling our risk management. We came in aggressive, and sometimes these days lead to great results. For example, on that day where I had 18% in a single day in the public signals with full proof, my FX book and everything, that was a great day. But it's not like that every day. The point is you show up every day and you address the market correctly with correct strategy. And on a volatile moment like an election day, there's money to take. So sometimes it will play in your favor and you'll end up having a 10, 15, 20% day, which is possible, but it's not every time. So as long as you're not doing reckless gambling and you end up minus 10%, which you can very easily spiral into, I knew when to call it a day. I knew when to cut my losses and say, hey, I'm up for the day. I made a little bit of money. I'm not going to go in the hole and go in tilt. So I called it a day over here. And that's the reality of trading. Being aggressive with your entries on a high probable day, being aggressive with your break even, being sharp with your entries so you can get good risk to reward, taking profits aggressively, TP levels, and then letting the market do its thing. Sometimes you hit a home run, sometimes you don't. That's the reality of trading. But the key here is notice how I manage risk, notice how I waited for confirmation, notice how I didn't go on tilt, and I ended the day all right. Not a crazy day, I just ended the day all right, but full transparency as always. And as you know, the real profitability comes from being restricted, which is why I always say a restricted trader is a profitable trader.